Well, the S&P is down again after slipping midweek, just after we thought we were in the clear. Of course, the market has been on the comeback since its derailment, but that free fall came just after our latest inflationary reading, which put all the spotlight attention right back on the Federal Reserve. So today, I wanted to go ahead and cover what I think you absolutely need to know as an investor before serving up 7 dividend stocks for the long term for you to walk away with. With that, let's dive right in. So let's go ahead and get to some of these macro insights first, and then we'll get that out of the way and dive into the dividend stocks. This past week, we had a reading on inflation, which was released midweek. Now, I think to everyone's surprise, mine included, inflation was much hotter than expected. As of the latest reading, inflation jumped up to 3.9% from 3.4%, which is precisely why we saw the stock market dive deep into the red territory just after that report was released. Now, I hope you know by this point in time, especially if you've been out there following me on a week-to-week basis, that the Fed's goal is 2% inflation. So this news being further away from their goal was an upset. But it's the rationale and the takeaways that matter the most for us investors. You see, ultimately, market participants were anticipating rates coming down around May. But now, after the latest inflationary reading, expectations were revised, and those rate cuts are supposed to be coming now in June or July, which means that businesses are more likely to be in this survival in the fittest environment for a longer period of time until those rates come down. Now, personally, I think the market negativity will soon be forgotten about, as we're already seeing that is the case. So I'm not too nervous about all the recent news. However, it was that initial shock and awe that's got us to where we are, and it doesn't mean that we shouldn't jump the gun here, though, because if we're just freely investing into anything right now, you could lose a lot of money. So I'm going to suggest you stick to quality, and that's just the stocks that you can hold on for the longer period of time and trust that they're going to do well, which means that their prices may slide right now in this environment that we're currently facing, but over time, I think these types of businesses, the quality businesses with good leadership, great products, good brand names, these are going to be the companies that we should just dive into now and hold on to no matter what. So let's get in now to these dividend stocks. Our first one is Snap-on, ticker symbol SNA, which is a manufacturer of high-end tools and equipment specific to the auto and transportation industries, whether automotive, marine, aviation, or rail. Of course, Snap-on would be a performer in a booming economy, but with tool sales overall falling and inflation coming in hotter than expected, the stock has actually taken a beating here, sliding by almost 9% on the year, trading for $263 per share, P/E ratio at 14.3. Zooming out to get that bigger picture, almost 200% worth of appreciation over the last decade, and that's speaking now to our dependence on Snap. Moreover, we have analysts who are foreseeing a royal comeback here, with a forecasted share price coming up to $325 per share, which is over 23% worth of upside. Now, until then, Snap's dividend is going to have us covered with a 2.83% dividend yield that's been on a streak for 85 years and growing by 10% year over year on average there for the last 20 years. Next up, if you're really hungry for a dividend stock opportunity, check out Darden Restaurants, ticker symbol DRI. It just may be serving up what you're looking for as a restaurant operator, operating some of the most popular restaurant chains in the United States. Whether it's the Capitol Grill, Olive Garden, or Longhorn Steakhouse, just to name a few, Darden would very well take a bigger hit should inflation and higher rates just pinch the company's balance sheet, as we're already seeing the stock notch down, trading for $161 per share, P ratio of 20. Personally, I'm waiting for a better deal here because, as you can see over the last decade, Darden's experienced over 394% worth of appreciation. After all, people have to eat, and they're likely to do so on a dime, no matter what the environment is out there. As for analysts, they remain optimistic with Darden climbing back up to $177 per share. That's about 9.8% worth of upside. And regardless of that share price, the dividend here is just leaving me salivating, coming in at 3.25% worth of a yield. It's experienced about 23% worth of growth year over year, on average over the last 20 years. Now, investors, there's 2 out of the 7 dividend stocks. And now, before I get to the next 5 dividend stocks, I'm going to call on you to take some real action as an investor this year and join me on this financial freedom journey by subscribing for market insights and dividend stock ideas every single week. And while you're at it, as I created this content, I just want to know that you're actually getting value from it and enjoying it. The only way to let me know is by tapping on that thumbs up button, so do just that and I'll keep creating content like this. With that, let's get back to it here with the largest marketing and advertising gem in the world, Omnicom, ticker symbol OMC, which may catch some of you off guard, but now I want you to hear me out when it comes to Omnicom. As we experience economic pains and volatility, marketing budgets are typically cut, and that's what we've already seen. But it's when companies get back to spending spending that I'm most looking forward to because they're very likely to just ramp up all of their advertising. And when it comes to Omnicom, well, we're taking a look at a company that has clients like Apple and McDonald's, Pepsi and Nissan, and thousands, and I mean 5,000 plus more clients just like them. So just get ready for more marketing from these companies. As for now, let's peek into the stock price here. We're taking a look at Omnicom trading for $85 per share with a P ratio down at 12.5. Now, it could come down a little bit more, which is actually what I'm hoping for and expecting, but ultimately here we see over 56% worth of appreciation over the last decade, which may not be a ton, but enough so for hedge funds to pour millions of dollars into this marketing leader, along with analysts who are foreseeing more growth, upwards of 15+% coming up to $99.40 per share. Now, until then, you're going to enjoy a 3.26% dividend yield that has been growing on average by 10% over the last 20 years, and that's maintaining a dividend streak now for the last 38 years. But if Omnicom really isn't necessarily one of your kind of investments, I hope that you're going to gain some interest in Medtronic, ticker symbol MDT, which is a medtech leader developing some of the latest medical advancements known to man. However, since the onset of COVID, it really hasn't fared all too well in our economic environment. Now, it's been really on the rise as of this year, but more recently, it actually slid again. $83 per share is what we're currently dealing with. Over the last 3 years, though, it's still down by 23%. However, up by almost 100% over the last decade. And as we approach a turnaround economy, Medtronic is likely to continue to gain more momentum, which is why analysts are forecasting a share price climbing up to $88 per share. But more importantly here is the amount of hedge fund activity. This is actually exciting me the most with Medtronic. Over 4.4 million shares purchased by smart money last quarter. And until that comeback, we're going to get a dividend coming in at a 3.3% dividend yield, a streak for the last 45 years, and growing on average by 13% year over year for the last 20 years. Next up, let's go ahead and calculate our odds here with Texas Instruments, ticker symbol TXN, which is in the business of semiconductors, and of course, it is just quite a powerhouse of a player that has been knocked around rather recently in our current environment. As we see here, it's down by almost 7% on the year, trading for $157 per share with a PE ratio that is continuing to come down here. Right now, it stands at 22.8. But zooming out, we see about 370% worth of appreciation. So what will the tech future hold for us all and Texas Instruments? I would bet, along with the analysts, more growth as expected here. Over 7% worth of upside coming up to $169.94 per share. But until then, you will enjoy a dividend as a shareholder of Texas Instruments. And we're talking about a dividend yield that's coming in at 3.29%. It's been growing on average by 23% year over year for the last 20 years on average, and maintaining a dividend streak for over 62 years. And then there is T. Rowe Price, that's ticker symbol TROW, a global money management firm with the vast majority of their assets invested in the NASDAQ. So it's certainly then seen a ton of volatility, faltering in the harder times, but runs with the bulls in the greener days. So check this out. After the inflationary report, it took a beating, faltering to $106 per share and still down from 3 years ago by roughly 26%. But after a decade's time, we're seeing over 85% worth of appreciation, and it's just getting closer to those days of a rate cut. Therefore, I'm a fan of T. Rowe Price. Hedge funds are too. Over 648,000 shares purchased last quarter. And the cherry on top here, the T. Rowe Price dividend coming in at 4.66% worth of a yield. It's got a 37-year streak and roughly 14% year-over-year growth on average there for the last 20 years. But investors, if you're really looking for a steal right now and a dividend stock that pays a dividend every single month, get your eyes back on to Realty Income, ticker symbol O. This is a REIT that has become the safest monthly dividend stock with arguably, I think, the largest moat, as its portfolio has amassed to over 13,000 properties, touching every single U.S. state and now across continents, with over 1,300 clients to fill their leases. Now, I remain a huge fan of Realty Income, and particularly love to see this stock get wrecked amidst our high interest rate environment, knowing when interest rates begin to come down, Realty Income will likely soar. But as of this recording, the stock has slid back down to around $51 per share. That's down by about 10% on the year. Well, the bigger picture here, we're going to take a look at almost 100% worth of appreciation over the last decade. Analysts are forward thinking when it comes to Realty Income. They foresee over 25% worth of growth coming up to $64.58 per share. However, as we're here for the dividends, let's go ahead and take a look at Realty Income's dividend at 5.99% of a dividend yield, shelled out for the last 54 years while steadily growing by about 5% year over year for the last 20 years. And there you have them, 7 dividend stocks. So now let me know in the comments down below what you think of these stocks, or if you have your eyes on different stocks. Be sure to tune into more insights right here, but before you actually click away, tap on that subscribe button so you never miss another dividend stock idea.